Morning everyone. Uh, I hope you guys are doing well. I wanted to record this video on Blackboard, but apparently I don't have access to my Blackboard. So in today's lesson, we are focusing on posting to the general ledger. So like always, I'm the one who prepared this slide. So without waste of time, let's get to it. So what I am expecting from you guys after this lesson is that I hope we achieve the following milestone. You are able to understand what is the purpose of a general ledger. You are able to know the structure of the general ledger, and as well as being able to post to the general ledger. Now let's look at the bookkeeping cycle. We're saying that after summarizing the source documents in the subsidiary journals, follows on by posting these journals to the general ledger. The general ledger summarizes the subsidiary journals. The general ledger is a collection of accounts. A set of accounts forms the basis of the accounting bookkeeping system. Each account has a debit, which is on the left side, and a credit, which is on the right side. The capital account, liability, income accounts all record increases on the credit side and decreases on the debit side. So if you can remember the three golden rules, you will have your accounts will increase on the credit side for owner's equity as well as liabilities. So we say drawings account, asset and expense accounts all records increases on the debit side and decreases on the credit side. If you can remember, if the owner takes staff items, inventory from the business, which is drawings, we will record that on the debit side of owner's equity because we are decreasing the worth of the business by taking items out of the business. So if you can remember, our assets will increase on the debit side because if you are putting money in the bank account, your bank account will increase, and to reflect that, we show it on the debit side. So we say in summary, drawings, assets, expense accounts are basic debits, and capital liability and income accounts are basic credits. Now you will get the gist of what I'm talking about as we continue. So here we look at the structure of the general ledger. So the structure of general ledger, it's very basic, straightforward. If you remember when we were doing accounting equation, we're actually doing this but in another form, in an accounting equation format. But here we're still doing the same stuff that we're doing when we're doing accounting equation, but we are recording those transactions now in a general ledger and not the accounting equation. So here we have a structure of the general ledger. This is the left side and this is the right side. So the left and the right side obviously looks more or less similar. You have the date where we record our date. Number one on this side will record the year and the month. Number two, here on the side of the date, we will record the actual day when we were processing the transaction. And number three, we'll record the details of that transaction, whether it's a bank or cash sales or it's creditors. We will record it under details. Foil. Now, folio number, which is number 4, this one, it is used to cross-reference the journals that we are using. Remember, this is a general ledger. So to cross-reference journals, your cash receipt journal, your cash book payment, as well as your petty cash journal, we will use the folio column to reflect that here. So if the transaction that we are recording comes from the cash book receipt, we will use the folio here to say CBR, because the transaction that we are dealing with, we are taking it from the cash book receipt. Here we will record the amount. Here we will record the amount of that transaction, and we will do the same on the right side. The rules for balancing an account, they are very simple and straightforward. We are saying that balancing of accounts refers to the month-end process of totaling the accounts. The month-end process of posting to the ledger is followed by the preparation of trial balance, which is nothing more than a list of all the general ledger accounts and their respective totals. To arrive at the account totals, such accounts need to be balanced. Now, here's what we are saying. We are saying that the first thing that you do after you do your general ledger, the total of those general ledger accounts, they will be used to prepare your trial balance. Now, remember, we use trial balance to prepare our financial statements as well. So the mechanism of balancing accounts differs depending on the number of postings, and for the sake of simplicity, it can be arranged into one of three classes. Now let's look at those three classes. We are saying that the rules for balancing an account, again, the first rule, where an account has only one entry on either the debit or the credit side, it is quite simple to see the total of the account. Therefore, there's no need to calculate the balance at the end. Straightforward, guys. If you only have one transaction on any side of these accounts, you do not need to balance them off at the end, because they are straightforward. It's not complicated. You can at a glance see what is the balance, so there is no need for us here to close them off at month end. Now the second class, we say where the account has multiple postings on one side only, then that side of account can simply be summed by placing a bold line under the last posting in the account and calculating the sum below. So obviously, if you have multiple accounts on one of the sides, whether on the credit side or on the debit side, you will need to sum them up in order to get a picture of what is the total of that account. For example, let's look at vehicle. We had two transactions on the 12th and on the 15th. To understand how much we have, we added 69 plus 50,000 and we arrived at our total, which will be our balance when we close the books. Now let's look at the third class. The third class, we are saying where the account has multiple entries on both the debit and the credit side, the process is more complicated. The side of the account that is expected to be the greatest is summed first. Now, very simple. The side of account which is the greatest between the two, it's supposed to be calculated first. So if on the debit side you have 50,000 and on the credit side you have 10,000, you will start by summing up first the one where you have 50,000. So you sum up the side that has the greatest value. So let's look at vehicle. In vehicle, the debit side appears to have more value than the credit side. Let's look at that. We have two transactions on the debit side on the 15th and on the 12th. So the total for this was 119. And on the credit side, we only had one transaction on the 18th. On the 18th, so it was 10,000. So the side that we are going to calculate first will be the one with the greatest value. In this case, it is the debit side with 119. You will say 119 on the debit side. You will take the same amount, bring it on the credit side. Then from there, you just minus the 10,000 from 119. So your balance will be 109,565 as shown here. So this will be the balance carried down. This is how you're going to close off at month end. You're going to close off like this. But when you open, remember we are in March. When you open in March, the balance carried down will need to be restated. So how do we restate this amount? On the 1st of April, as you can see here, we have a balance brought down. We take the same amount, because obviously this side was the biggest when we closed off. We take that 109 and we make it our balance brought down, and that's how we will begin the month of April. Now, what to take from this lesson? What was important for this lesson? It's the following bullets. We are saying that it is important that you know the 3 golden rules of accounting. Know that all items in accounting are recorded under assets, owner's equity, or liabilities. All transactions in accounting, they need to be recorded under assets, owner's equity, or liabilities. Nothing more, nothing less. So we say that assets increase on the debit side and they decrease on the credit side always. That does not change. Owner's equity increases on the credit side and decreases on the debit side always, and that too does not change. Liabilities increases on the credit side and they decrease on the debit side always. It does not change as well. Now let's look at the next slide where I just show you what I mean, that we use the general ledger to prepare our trial balance. Let's have a look at this trial balance. Now here we have the trial balance. The trial balance is showing 2 sections. We have the statement of financial position section. We also have a section for nominal account section. Now the statement of financial position section, it will reflect the amounts that we need to use when we prepare our balance sheet or the statement of financial position. When we prepare the income statement, we will have to use the nominal account section. Now if you can check this trial balance, it has the debit side as well as the credit side. Now you are going to take the closing transactions as they are on your general ledger, then you're going to post them under the trial balance. For example, we know that with capital, let's look at the first one. If someone or if the owner brings capital contribution, it will increase under owner's equity. And we said owner's equity always increases on the credit side. Remember what I said, owner's equity increase on the credit side. So because this amount will increase on the credit side, we need to reflect it on the credit side. Very simple, guys. Now the second one, it's drawings. When the owner takes stuff from the business, we also going to decrease that on our owner's equity. And we said owner's equity, because it increases on the credit side, we are going to decrease it on the debit side. So it increases on the credit side, it decreases on the debit side. So if you can check the statement of financial position, usually it reflects the assets that you are having, it reflects the owner's equity, and at owner's equity we are only reflecting few things. If you can check owner's equity, we are only reflecting capital and drawings. We are also reflecting liability because we have a loan. If you can check, we have a loan, and we are also from owner's equity, we are also reflecting owner's equity. We also, it is only those 2 items at the top, the capital and the drawings. Then asset, we are reflecting asset, owner's equity and liability. But from owner's equity, we are only reflecting 2 things, capital and drawing. Remember under drawings, under owner's equity, we have income as well as expense. Income and expense, they are only reflected under the nominal account section where we prepare the statement of profit or loss. So under nominal accounts, we are going to reflect the income as well as our expenses. So depending on how you view this, remember the income and expense, they are also part of the owner's equity. So any income will increase our owner's equity on the credit side, and expenses, they will decrease our owner's equity on the debit side. So if you can check, services rendered, it's owner's equity and it increases on the credit side. Sales, it's also owner's equity, it increases on the credit side. Cost of sale, it's now an expense, it decreases on the debit side. Interest on current account, it's an income and it increases on the credit side. Telephone, it's an expense. Wages, it's an expense. Rent expense. Rates, taxes. Insurance is an expense. Bank charges, postage, stationery, staff refreshments, fuel. These are all the expenses that we are currently having, and they will decrease on the debit side. So it is true that the owner's equity account reflects the net worth of the business, because what it does, it takes the income and it minuses the income from the expenses. Now at the end of the day, when you are doing this, if you can check at the bottom, the debit side and the credit side, it's balancing. So even with you, when you are recording this, you must ensure that the debit side and the credit side is balancing, like always. So if one side is not balancing, it means there is something that you are not doing correct, because those two amounts, they are supposed to be balancing, and that is a sign that your trial balance, it's perfect, or it's 100% correct. So with that being said, this was today's lesson. It's very short and straight to the point. I hope you learned as much as I have learned. If there is anything that you didn't understand, please drop me a comment and I will get back to you, and I will address all comments that obviously are written down. Please like and subscribe and share this video with other classmates. Thanks for attending.